Well, all eyes are on Nvidia today. The AI chip giant is set to report its third quarter earnings after the close of trading. It's the biggest event in the stock market day. To be sure, let's get some perspective. Joining us in studio now is Laura Lau, Chief Investment Officer at the Brompton Group. And as you can see, she's in our studio. Thanks for coming in.
Great to be here, Paul.
What will you be watching for when Nvidia releases its results later today?
So what we're really watching is the current generation of chips is called the Hopper. The next generation is the Blackwell. So there's been rumors that the Blackwell has had some manufacturing issues, been delayed. There's also rumors that there's cooling issues. And then there's also questions if you're going to be buying these chips, do you buy the old chips now? Or do you wait and buy the new chips with better performance? Mm-hmm. So this will be a transition quarter. So we want to see how all of that goes and the guidance going forward as well.
The CEO of the company referred to early demand for the Blackwell chips as being insane. That is quite a piece of corporate guidance for a chief executive officer to deliver to the market. Is it possible expectations are set too high for what the company may be able to report today?
So they've well exceeded expectations for 5 quarters. So after that, the expectations are very heightened. So it does become difficult to beat those expectations. And I think demand is definitely there. It's whether they can fulfill that demand. And in terms of their big customers, whether it be, Microsoft, Google, Meta, they all have lots of money. They've all said that we're going to increase our capital for this. So they want them, but it's really when can they fulfill it?
What's your advice to investors when they ask if Nvidia is too expensive to buy?
I would say that it's a fantastic company. There's no doubt about that. And that's how a lot of people have played that AI trade. However, we are also seeing that AI trade start to diversify outside of just Nvidia. Like we did see some of those early movers like Microsoft, Google move, and now we're starting to see those AI infrastructure plays move because those data centers need a lot of electricity. They need a lot of cooling. So I think that might be where you want to go next. And then next would be the AI enablers, those that will benefit from AI.
And Nvidia shares are owned in the fund managed by Laura and her colleagues at Brompton. Let's go to another stock. I don't think you own this one in your fund, but it's very topical today. Target getting absolutely crushed. It's not very often that a stock tumbles by more than 20% on negative earnings reaction, but that's what's happening to Target today.
So what we're seeing with Target is that it seems like they've had a number of issues. Number one, inventory has been higher than expected. Sales have not been as good as expected. And part of the reason the inventory is higher is they actually pre-ordered because of the U.S. port strikes. Mm-hmm. And I expect they'll probably pre-order again because of the tariffs. So there's definitely questions of sales, and they tend to sell more clothing, discretionary items. So we're starting to see that consumer come under stress, and it comes to stark contrast to Walmart, which really reported a spectacular quarter. So it feels that Walmart is taking market share from Target, and this is poised to continue.
Right. I asked this question to an earlier guest. Is this an execution story at Target? Target and Walmart, broadly speaking, are in the same sector of the U.S. retailing world.
Definitely, because we're seeing Walmart do much better, and we do own Walmart. We don't own Target. Walmart is executing, whether it be on the e-commerce side and same-store sales. So they're doing a better job than Target right now.
Let's go to the Canadian grocers. Metro is in the spotlight today because as released results, those results we've said in our newscast tended to miss expectations. It's not a huge amount of reaction in the stock, and the stock is up 25% so far in 2024 and 23% if you run the graph back to a full 52 weeks. What do you think of this stock, which is owned in a Brompton Group fund?
Yes, we do own this. Not a big weight because we actually do prefer Loblaws to Metro, but we do own them both. So what we've seen is this year they've invested a lot of money into the distribution centers. So that's, so there's been a pause on profits, and they have guided to that. And I think what is giving the street some comfort is that they're guiding that fiscal year 25 earnings will start growing again, and long term and midterm guidance, earnings should grow 8 to 10%, which I think is a little aggressive, but the market is seeing that, oh, we're finally turning. And markets love pivot points.
Right. It's not, I was about to say, it's not uncommon for the big grocers to spend large amounts of money on their distribution and logistics systems. The others have done it as well. You think investors will greet the fact that Metro's now at the end of this and should benefit from it from here on, correct?
Definitely. When you're at the end of that investment cycle, two things happen. The cash doesn't go out, and then, the cash comes in and your expenses come down. So I think investors are very happy to see the light at the end of that tunnel.
Let's finish with the Canadian banks. We spoke with an analyst a short time ago. What are you expecting from the Canadian banks? So what's your view of the bank stocks at this point?
So we're watching, a number of things. Number one, we're watching the loan losses. So we've seen that BMO, it has been the one that has taken the largest loan losses over the last cycle. So we want to see when does that stop. It does feel that we're getting close to the peak of loan losses, and likely probably first half of 2025, and then second half of 2025 should get better. We're also seeing, the net interest margins. Basically, if you charge less for loans because the Bank of Canada rates come down, how much will that be impacted? So we're watching that as well. And then, of course, all the individual names, they all have their own strengths and weaknesses. It's funny because for the longest time, it didn't matter which bank you bought. It matters a lot now.
And on that note, which names do you own on behalf of clients at Brompton?
So we do have a bank fund where we own all 6 banks, but in those actively managed funds, we actually do have Royal, National, and we started picking at Scotia because it's really the cheapest bank. And we own CIBC, which is also a reasonably priced bank, and typically they've been the most retail bank, the most mortgages, the most vulnerable to an economic downturn. And this time, there have been no problems.
Laura, thank you as always for joining us.